Now we're going to turn to Europe. And first, we're going to start with some of the high levels, and we'll have some charts kind of digging into some of the key pieces. So when you look at consumer confidence in all of the Eurozone aggregate, it was expected to be at negative 18.5, came in at negative 17.5, so slightly better. But now we want to look at the Eurozone manufacturing. So it was expected to be at 48, came in at 45.5. So again, as we've been talking about manufacturing, and this is just looking at exports, imports, we saw the manufacturing slowing. But one of the things that we had said is, well, manufacturing slowing, there's a lot of inflation that's still there. It's going to hit the consumer, so services. Well, it was expected to be at 54.5, and instead it came in at 56.6. So clearly there is still activity that is happening on the services front. There's still things that are moving. So when you start thinking about what the ECB is going to do, it's like, well, yes, I see what's happening with manufacturing, but services is still up. You're still going to get this inflationary push. So the composite, which was expected to be at 53.7, the same as last month, instead came in at 54.4. So again, you're seeing these pressure points continue, but then consumer confidence still struggling at negative 17.5. Economic confidence deteriorated versus expectations. Industrial confidence is now negative, coming at negative 2.6. But service confidence expected to be at 9.5, which is similar to last month, came in at 10.5. So it's a tale of two cities, and at some point they merge. But when they merge is going to remain an unknown. And again, that's where you have to say it's something's going to break, something's going to catch, and it's just a matter of when. So then you turn to Germany. Germany was expected to be on the manufacturing side 45.7. Remember, this is an exporting nation. Manufacturing is paramount to them, and they came in at 44. So again, more contraction on the manufacturing side. Services was expected to be at 53.4, came in at 55.7. So you're still having a lot of that activity, bringing the composite well above estimates to 53.9. So there's still some of that disconnect, and then it's driving some consumer positiveness, where it was in May, it was expected to be consumer confidence of negative 28, came in at negative 25.7, still contracting. But again, it's getting some of this back and forth. But then you look at the business climate. Expected at 93.5, came in about right in line. Current assessment expected at 96, came at 95. IFO expectations came in slightly better at 92.2, which was about a point better than the estimate. So there's still the service side, the consumer side is still hanging in, but we're seeing more and more of that pressure. And as one of the charts that we showed earlier, when you look at the number of employees, the credit flows to non-financial private sectors, that you're seeing this shrinking, which is going to lead to, well, how can the service sector can get better if unemployment is going to start to turn? Again, not that it's going to surge, but you're going to start to see a bit more wage compression, a bit more pressure as inflation remains elevated. Now, PPI in Germany came down, expected at negative 0.6, came at negative 2.6, but that was for March. And we know that April, you had a fairly sizable pivot in terms of things going much higher. So now you look to France, business confidence came in at 102, slightly below estimates. Manufacturing confidence came in at 101, below estimates. Production outlook last month was -1, came in at -4. The retail sales year on year was previous was -4.3, came at -5.6. Manufacturing PMI, we expected a 47.8, came in at 45.5. So again, manufacturing slowed considerably. Retail sales were down. And then the services was expected to be at 53.5, came in at 56.3. So this is what I'm like, when you look at some of this, you're like, that doesn't jive. Like, okay, so manufacturing is getting worse. Retail sales are getting worse. Inflation's ramping back up, and services crushed it. It's like, at times you look at this and goes, you know what? Sometimes things don't make sense. And this is one of them. Clearly the consumer's there, services are expanding. So it's just, and they've been expanding. It's not like they haven't been expanding, just like manufacturing has been contracting. And it's just, there's a tale of two cities, and when they merge, I think, but realistically, because services still carry so much weight, the ECB is going to have to put that pressure. And eventually, when you get that catch up from services to manufacturing, and not that they're going to meet at the level that manufacturing is, but they'll meet lower, there's going to be some of that pressure. Consumer confidence index went from 105 to 105.5 in Italy. Manufacturing confidence was at 104, came in at 103. So again, you're starting to see some of that weakness on the manufacturing front. So now let's look at Eurozone goods imports. Share of total, China coming down a touch, US right there. But when you look at financial conditions, so Eurozone financial conditions are getting worse again. So remember, financial conditions is the ease of getting money, the ease of borrowing, the cost of borrowing, and when you look at it, it's like, all right, well, clearly the manufacturing number is reflecting that, but the service market is like, oh, no, things are fine. So that's where we see some of this catch up. And again, the financial conditions are telling us that the catch up could be fairly sharp and sizable. So then when you look at business climate, again, you're getting some of that bounce, but starting to flatline. Same with expectations. When you look at the German piece, and just putting it all together, because I think this is always a great chart looking at the manufacturing side, you're still on the manufacturing front, the expectations are still slightly negative, but you're starting to see some of that flatlining. And now service sector expectations starting to roll a little bit. You're still expanding, but starting to roll. Construction getting better, but again, still in the negative territory, with trade expectations still negative. So you're a manufacturing nation, trade is still a negative. And it's a matter of, okay, well, that's going to continue to eat into some of this economic confidence and economic growth. Then you look at, again, the German side, you can see just where we are on the manufacturing front. As we said, it's stayed negative. Same with France, you had a small bounce, but again, you're still in a contracting standpoint. Eurozone manufacturing PMI, again, moving lower as the composite has that bounce. So it's just going to be a matter of when does that service side or the buyer or the consumer really start to dig in. And one of the things that we think is going to be the bigger issue is the ECB raising rates, because remember, many mortgages in outside of the U.S. are ARMs, or adjusted rate mortgages that are 10-year duration. They don't have 30-year fixed like we do here. And when that restrike happens, that's going to really bite down on the consumer. And then when you think about, people that rent, that person who bought that facility, that apartment that you're renting, they have an ARMS mortgage to finance that. So again, then as their rates go up, your rent's going to go up. And there's usually language in the lease where it'll be pretty much a straight pass through. So that's where we see that catch up. When that happens, typically they restrike every quarter. So as now we're in April, we're going to start getting those restrikes. And then that's when we could likely start to see some of that service pressure as we go forward, and then the consumer really starting to take a hit. And as you can see, the confidence is still negative, the sentiment's still starting to roll. It's just a matter of when does that catch up happen, and that's where we think that the rubber meets the road, is really when you start to get that hit on the rate side. So that's what we have for you on the European side. In the next segment, we're going to go deeper into China, Asia in general. We're really going to hone in today on China and South Korea just because of the data points that are there, especially on Chinese housing and what's happening on that quote unquote recovery.